Futures continue to deteriorate throughout the morning. Take a look here. The 10-year yield hitting its highest level since late November. Joining us right now in the markets, Liz Young, head of investment strategy at SoFi. Dow looks like it's going to open off about 350 points this morning. Liz, what's happened here? Investors are just waking up to the reality of the Fed in the last 24 hours?
Well, it's interesting what happened yesterday. I mean, a 10 basis point move in treasuries on very little news, maybe some stronger PMI data, but there wasn't really anything that was convincingly concerning. So I think what's happening is we're looking at, obviously, in the last 3 months, we've had this huge move in Fed funds futures, the market trying to get comfortable with the idea that cuts continue to get pushed further and further out into the future. And now even floating by some commentators, the idea that what if we don't have any cuts this year? So digesting that at this level of valuations, plus coming off of a really strong rally that had broadened out and a lot of sectors started participating. And now looking at some of the signals that we're getting from things like gold and some of this news on the periphery about currency volatility around the globe, I think is giving investors some jitters at a time when the rally has paused.
Okay, so A, what do you do about it? And B, what is your perspective on this? Which is to say, you know, we had Roger Ferguson on the broadcast yesterday, and he's been right pretty much across the board. And he said, look, there's a decent chance that there are no cuts in 2024 at all.
Well, everything held constant. If the economic data continues to behave and we continue to see stronger than expected growth, stronger than expected earnings, and you've got inflation that has plateaued, there isn't a good reason for the Fed to cut at this point. And in fact, a cut, or at least beginning a cutting cycle, would present the risk of overheating. And what we're seeing from the commodity sectors, and gold in particular, but other commodities that would be looked at as cyclical commodities, is that they're catching a bid. You've got oil up, you've got copper really hanging in there, which tells me that investors are still looking at inflation as unsolved and something that could heat back up very quickly if global demand picks back up. So I think you do have to be careful here and watch your valuations and make sure that you're balancing out the risks of not only inflation reheating, but the risks of there being a pullback in equities. So a lot of this risk appetite that's been healthy, which is good. It's definitely good to see healthy risk appetite in the market. But a lot of the risk appetite can start to feel complacent, and you don't want to get sucked into that at a time when things are getting more uncertain.
You guys still run your crypto hub, or did you shut that down? I don't remember.
We do not.
No.
We shut that down at the end of last year.
I was going to ask you whether you thought that Bitcoin being off as much as it is a risk-off play, or how they're supposed to think about, or if that's a play on the Fed.
I think at this point in the cycle and at this point at what has happened with Bitcoin and crypto, it is more of just a trepidation of risk off and a liquidity signal. I think investors are concerned about what's going on in currency markets, as we should be. We should be paying attention to that. There's been so much focus on the Fed and so much focus on the way that Treasury yields are moving. Now we've got central banks moving in different directions.